Am I recording? That's what I want to know. Yes, I'm recording. Yes. All right. This is L. Jermaine Russell. I am here. It is Saturday, July 28th. It's a beautiful day outside, but instead of being outside, I am stuck indoors trying to catch up with paperwork because I've had an extremely long week, extremely busy week, despite the market being extremely slow. And what you do on slow market weeks is that you find things to study, you find people who have been in the game a lot longer and try to pick their brain, or try to pick their strategy, or understanding chart patterns, specifically chart patterns. I think chart patterns is probably the best thing to really learn. But because this week has been downtrodden by subscriber growth and some of the social media platforms, we've had some big failures after earnings have been released. Most notable one is Netflix. Netflix going from 400 some odd dollars. Let's look at this chart, right? Because I think this one is pretty much what gives a big indication of what has happened during the past couple of trading days. Well, since last week actually. So around here at 423, that's when it really started to downturn, and I think it still has more room to come down. I believe that it's going to come around the 335 area, maybe 338, but definitely 335. I could see it kind of testing and then bouncing back up. I really do hope that it stays above the 100-day moving exponential line, because if it does, then it gives me a bullish signal that it still has room to go upward. So that's what I'm looking for with Netflix. We also had the same thing with Twitter this past week, where Twitter actually really fell down. There was a lot going on with subscriber growth. Subscriber growth has been the biggest indicator for profitability in a company, even though if a company does not have the legitimacy to show you what their profits are. And some of them are not making any profits, but their stock price continues to go up. So I do feel that there's a lot of inflation going on. I do feel like the markets might start dropping somewhere in around October of this year. So I'm really trying to play it safe, and playing it safe means that you're taking less trades. I have been taking less trades this past week than in the previous weeks, just because I feel like I am chasing some stocks. And even though I did do well with a couple of stocks this past week, I do feel like that I should play a lot more safer and stop over trading, which I think that is probably one of the biggest things that people will do, is that they will overtrade. And if you are looking at the best position to get in on a stock, that will prevent you from overtrading. So for instance, one of my biggest winners that I had was with HEAR. I was in at $26 and 26.46 to be exact, and I sold at 28.90. And the only reason why I ended up selling is because on this day it had two dramatic drops. If you're new to candlestick charting and you're just watching this for the first time, candlesticks are very much, I say, the end all be all to companies, identifying where a company is, because that's where a lot of the supply and demand is located when it comes into the open market. So while here, which is a company that specializes in making headphones, since they are doing really well, there is obviously a supply and demand that has been shown on the chart. And if you want to know a little bit more about supply and demand, I do have it on my LinkedIn page, where I wrote an article specifically about supply and demand. Let's see all my articles, and when we scroll down, if my computer wants to scroll down, see, I wrote an article on supply and demand and essentially how to be able to use it on the stock market. So even though that this is a novice approach on what the stock market, how the stock market reflects on supply and demand, just to know that economy rules everything. So you know, you might have some finance gurus, you might have some accounting gurus, but in the stock market, the public market, economy rules it all. Economy rules everything around me. Cream, keep the dollars. Dollar bill, y'all. So anyway, we are here at here, and like I said, I got in. This is each candlestick represents one day, and when I got in on the 20, I think it was the 20th. No, it was the 19th or 20th. Oh man, so I need to organize my notes just a little bit more better. I think it was the 22nd, because on the 20th, because on the 20th, I was looking, so I bought it on the 22nd, sorry. Bought it on the 22nd at 23, no, 22nd was the weekend. So I had to buy it over here. So I bought it here over the weekend, because 22nd was the weekend. So the 23rd is where it continued to go up, and I was a little bit afraid on the 23rd. Not a great deal, but just enough just to have me think. And I did not know it made this move in the after hours on Friday. So it's whatever. I had no idea, but I do feel like it was going to go back up. But I will go over that chart. But since I've been going over loser charts the past couple of days, the past couple of videos, I want to go over some of my winning trades that I have done, and this is one of them that I like the most, which was here, just because of how I played it with such patience. I really displayed a lot of patience with this one. It took me some time, but I did, and I got it. So I was buying here, around here, like around 20. This is 27. So I was buying it like right around here at 26.46. And I was buying it because I saw that it was going to come towards this little breakout area. This is why these red lines are here. They act as support resistance lines, and that's when you know if you should buy or you should really start to sell. And I use these lines all the time for me to help me guide my trading. It guides me on when I should buy, when I should sell, all the time. If I know that a stock that has potential is hitting resistance and is just not quite getting there, I definitely use it as a means to help me guide if I should sell it or if I should keep it and allow it to continue running up. And as we saw here, that's what happened. It even though it bounced off of 28 and pulled back, like I said, I was a little nervous on this day. But there was some support back here, and I know the lines aren't drawn, but there was some support that was back here at 27.60, and that was pretty much the only reason why I held it, because I saw that support was not giving out. And as we can tell, the very next day, what happens, it hits the 30. Now 30 was my target price, and I was starting to get greedy at this point. I was thinking that it can get up to the analyst target price to it was over 30. I thought I saw $35 on one of these, and I don't know, but essentially I saw a target price that was over $30, and I was like, what? So I kind of got a little ahead of myself. I should have sold at $30. That was damn near what, $3.50 per share that I was earning. But I will kindly take my $2 plus a share, on this trade. So I ended up selling it at $28.90, which was $2 and roughly 50 cents a share. And so I did pretty well on this trade. So I am very happy with this trade, just because that one, it was a gainer. And two, I did show some discipline, some restraint, and that's the biggest thing, is really showing discipline and restraint. So later on in the week, I said, hey, now that it's finding support, let me buy it at 26.50. So I bought it on Thursday at right around here at 26.50. And the market yesterday, and if you don't know what the market actually looked like, let's give it a look. This is what the market actually looked like yesterday. Let's go to the indices actually. Let's go to the Dow. So this was pretty red, right? It was extremely red. A lot of the technology companies were being weighed down. Even though healthcare was doing semi-okay, it was still pretty bad. And you see the NASDAQ, it was just forget about it. Like this was just treacherous on the day. So majority of the indices were red, but that's okay because here, even though it was red, it did hit the previous resistance, which was 27.23. It did hit it here, did hit it here. It's not exact, but 27.20 was definitely a place, and I saw it trying to hit and go over a couple of times in the pre-market and when the market opened. However, it just, for me, it wasn't going any further. So I did not display any patience. I got out once it started hitting the 26.30s, and when I sold at 26.20, actually I lost 30 cents a share on it. But at the same time, even though it did come down pretty sharply, I did show restraint. I didn't want to give in to the market and say, hey, here you go, here goes my money. But after a while, it did start to trade around the 26 area. And remember, I bought at 26.50. I don't like holding a stock that is giving me more than 2% loss on the day. I can handle 2%, but once 2% on the day, not just on the day, on my initial trade. Once 2% is hit on my initial trade, then I don't want to be a part of it anymore. I want to be in a position where after the first day, I am in the positive. I don't want to be on my first day in the negative. I'm not with that. I know a lot of people like to hold with that. Nah, 2% for me, I can lose that. I will be able to get it back with plays like I did recently with here and SECO. I don't want to hold that long. So, but as we can see here in the after hours, it definitely went back up to 28. Went back up to $28. So, hey, you win some, you lose some. I rather win bigger, and I did show some restraint. It did come back. How was I supposed to know it was going to do this? Didn't know. So so there might have something going on over the weekend. I'm not sure, but even if I held at the close it was still below my price, my 26.50 price, and I really don't like holding below that. So I'm just glad that I was able to get out when I did. So this is a perfect example of like sticking to your guns and sticking to what could possibly happen, because the market anything can happen. I'm looking at other trades because that I would have to say was probably my best trade during the week. Even though I had pretty much losers like the whole week. It was bad, and I did have one winner. Two winners, but this ended up becoming a loser because of how the market was operating yesterday. But as we can see here, and this is why I have my support lines, because it lets you know where the stock is going. So I actually, this is on the 5-minute chart, but I want to show you the year chart, SECO. I think that this is going to continue to trade sideways for a little bit, probably between $12.70 and $12. There's a lot of resistance here at $12.70. I don't know why. I really thought it was going to break on that Thursday, and it didn't. I'm in on the trade from 12.05. I actually put using two of my accounts, my E-Trade account and my TD Ameritrade account, to trade this, and I'm anticipating a move over $13. Like I said, I want to not overtrade. So by not overtrading, it helps me focus on what the best trade could be. And because of this type of candlestick, I've seen stocks kind of move in the green and kind of hold right, like, hoping that it will hold right above that 1230 area. The market weighed down so heavily. I thought it was going to hold 1250, and it didn't. If this one starts moving towards where I bought it at, again, I might actually have to sell it. I don't want it to go below 1205, but if it does, then I will get out. I'm not a big fan of losing. I'd rather be in a chart that shows that it's winning. And this chart, like I said, I can't complain. I was in this before when it was in the 10s, and I sold it in the 12s, or 10.99 to like 11 something, like 11. No, not 11. 12.50. I think it was. I was in this stock earlier. See, I like to write everything down, and then when I look for it in my notes, it's hard to find. But when I do, I'm going to start putting out an outline for myself. So when I do record some of these videos, I already know what points to hit. But essentially, when I bought this, it was at $10.99. I sold it at $12.31, and was able to get $1.30 per share. So I can't be mad at this upswing that I had already. Now, being in this, I'm a little being a little greedy and thinking that this stock could move up a little bit more. But there are some things that I believe that could cause this stock to move a little bit. They're doing some work with a group out in China, and this is going to help like brand their technology. So see, here we go. Group is leverage respective resources and expertise in branding, technology, network, and channel management to jointly establish a global omni-channel fashion supply chain characterized by deep cooperation in brand operations, big data, smart manufacturing, and smart retail. So essentially, this is like the company that is similar to maybe like PayPal, where you can buy stuff through their website, buy items and stuff like that. And now they are trying to expand where they are partnering with another company in China that will help with marketing and branding of their technology. So particularly since they are selling like clothes and fashion and stuff like that, this might be very helpful to let people know that, or at least in China, to let people know, hey, like, you can buy stuff from us and we can do a lot better. Maybe it might be competing against Alibaba, maybe it's not. I'm not 100% sure, but what I do know is that the chart says that it could move just a little bit more. Even though the momentum is dying down a little bit, I do believe that there might be some generation of momentum. And if it's not this week, then it'll probably be in another week. But I definitely don't want to see this going any lower than where it is. So I want to talk about at least one or two losing trades. And then another video, I will discuss some of the trades or some of the stocks that I believe that will do well in the upcoming week. This past trading week, I really thought that the food industry was going to do extremely well. It did not. It wasn't the food industry. Oops, sorry. It wasn't the food industry. It was actually restaurant. No, it wasn't. It wasn't the food industry. It was the food industry, but it wasn't restaurants like I thought it was going to be. I thought like Dunkin' Donuts or Sonic was going to move. Even El Pollo Loco was going to move, but it really didn't this week. This week was extremely slow as the market was really trying to gauge where global tensions were going to really be. But it was the supermarkets that actually had some really, really, really good traction, particularly with company UNFI buying Super Value. Super Value is a company that, if you ever seen Farm Fresh, they own Farm Fresh, and it has been a distributor. Yeah, Super Value has been the company, not a distributor, but has been a company that owned Farm Fresh and provided Farm Fresh for endless amounts of community states, cities throughout America. So now UNFI ends up buying out Super Value, and now that they are working as a partner, UNFI was at one point distributing to Whole Foods. And we all know that Whole Foods, they're still in contracts with each other, UNFI and Whole Foods. But at the same time, we do know that Whole Foods was bought out by Amazon, and Amazon is now trying to, they're going to figure out what they need to do in order to keep Whole Foods and the money, the profits within Amazon. So UNFI said, you know what, we're not going to do anything. We're not just going to sit back and do anything. We're actually going to be proactive. And in their proactive approach, they bought Super Value, which I think Super Value is this one, SVU. And as we can see here, it definitely jumped from $19 to $32. So, that's I was in the wrong industry. I should have been in the supermarkets, not in the restaurants, but that's okay. As we see with UNFI, it definitely dropped a lot more than I guess anybody probably would have anticipated. But they just made this big blockbuster deal, so they bought a whole bunch of this. So Super Values, that drop comes with the territory. You kind of expect that. I'm not expecting a whole lot from it, so I'm not going to be watching this anymore than where it is. But what I will watch are some of the trades that I did make and I dropped because I said, these are not going to do well, like Groupon. Groupon, I bought in at 520. I bought in 520 on this day, even though I was watching it, for a couple of days in the 480s, 460s, 480s. I bought it here when it actually had the surge at 520. And once it held 520 on this day, I said, yay, it held. And it went up to 550. But I didn't expect it was going to come back down. When it came back down on Friday, I was like, okay, what is it going to do? Is it going to stay up? And then, no, it definitely did not. It came back to 520. It teetered around 510. And I said, after it made this move up to 520 and came back down to retest 510, I said, I want to be out. So this is where I definitely, used my understanding of patience and sticking to the plan. I stick to the plan as strongly as I could, and it worked out because as we see here, it has continued to fall lower and lower. It was, like I said, it was a bad day on Friday, but also they lost their patent deal with IBM. I didn't really want to get more involved into the case than should be. I just knew that they were in a patent dispute with IBM, and they were been trash talking IBM, saying that they're essentially ruining the social media space because of who IBM is. I don't see it. Doesn't really care. I don't really care. What I cared was if the litigation would have sparked positive price action, and it didn't. But even though it didn't, the market was also down, so that didn't. There's been, call sweep, so I'm still learning options, so I won't get into that. But when they start doing the calls and the puts, that's when I really started to think that, hey, it could go a little bit higher. So I'm going to keep this on my radar, even though it's still in the red. It closed on the red and it closed strong, but it closed strong on the red. But everything closed strong on the red on Friday, so that was just fine with me. But let me just go back and show you why I ended up buying so you can see it on the actual chart itself. So here it was really holding. It was really holding this 520 area, and when it just made this little bump up, that's when I knew it was time to buy. So I did buy in the 520. Usually if it trades sideways like this, I don't try to get in, just because I think sideways means it's going to come down, especially when you have more red candles than green candles. But once I started seeing how strong this candle was, it gave me a clear indication that it was okay to buy. It did start to pull back during the after hours to 510, but I wasn't really worried because I was anticipating this move. But I was anticipating this move staying above there that long. And what was another thing that I really failed to do on this chart was to draw support and resistance lines. I was supposed to draw support and resistance lines right here at 550, which I would have clearly saw that it hit 550 here once, twice, 3 times a lady. So like it, for me, you know, I probably would have sold it for just took my 30 cents a share and just ran. But it's okay. I got out in due time to only lose 10 cents a share. SIEN, which is also another stock that I felt like it was going to really do some moving. But to go back to Groupon real quick, Groupon, it trades a whole lot. It's float. It's a lot more than what I'm normally trading. I am not trading 9 figures like this. I am trading 8 and lower, like 8 and 7 and 8, because it's, you know, it's a lot more predictability with it, and I'll show you why with AWX in another video. But with Groupon, that was just it was just too much. And then SIEN, the volume was just too low. The volume was not where I wanted it to be, and it already started doing its uptrending, and I believe it's just going to go through this whole valley thing that it did before. So it might go through a valley, you know, you probably, this part is the head and these are the shoulders, something like that. It double bottom, triple bottom if you want to. You know, it came up, then came down, showing us support. Support is at 19. Even some of the bids are at 19, so that's fine. It's doing this type of candlestick, which is pretty thick. It's similar to SECO. It's pretty thick. That's why I'm like, I'm not 100% sure. If you kind of combine these two candlesticks, it gives you a candlestick that's kind of like this, you know, but at the same time, like, I'm not sure if I should, you know. There's a lot of selling that happened there. So because there was a lot of selling that happened there, I still believe that this one could go down further. And the reason why I ended up buying this particularly is that okay, you're not going back far enough. The reason why I ended up buying this particularly is that on that, was it the 26th? On the 26th, I saw this at 21. No, I didn't buy it yet. Okay, I saw this. So this was Wednesday. I said 26th, the 25th. Yeah, this was the 25th. So on the 25th, I bought this at 21.65. So buying this at 21.65, that was roughly like right around here. I bought the breakout essentially. I remember trying to get in on the dip right around here in the 1240s, but it just kind of moved a little bit faster than I anticipated. And then once it went up, I was like, oh, it's up. I'm up 30 cents a share, and you know, I'm thinking, hey, it's gonna hold. It didn't hold. I started crapping my pants, but I knew that I wasn't. You know, I was only 13 cents below where I was, where I entered at. So now, as it's entering in on Thursday, I'm like, okay, 21.76. Okay, good. It's 12 cents over where I bought in at, and then it started to tumble. This 21 area, and then when it came back and it didn't break this 2180-ish area, I definitely sold at 21.50 because it wasn't holding, and I'm glad, because you see what happened here is that it went back down to 20, and now it's finding support just above 20. But when you stick to your plan, when you stick to your idea that, hey, this can have some movement, this can do something, and then it totally goes against your thesis, it totally goes against all the things that you were indicating that it could do, and it's showing you everything else. This is where, to be a true leader, this is where you are being flexible. Being flexible as a leader does not show weakness. Flexibility just shows that you're able to understand the environment that you're in, the market condition that you're in, and you have to adapt. And adapting is one of the first signs of intelligence. And being able to adapt to the market conditions will give you what you need to know. And notice how I did much better at getting out on this one, because I already had my support and resistance lines already drawn in. Kind of knew where I wanted to go, kind of know where I knew it could go, and had that as an idea and an understanding. So because I knew that, because I drew these lines, I knew that, hey, I can stay in or get out, and that's what I actually did. I got out, and it gave me something clear and to indicate. So, didn't really, like I said, didn't really make any trades this past week. Was really trying to focus on the best plays, and then when I did get on a play like NXTD, when all the cryptos were apparently moving, I saw it the very next day. I said, yo, this is not going to go any higher. And I remember buying at 194 and I sold at 182, and look where it is now. It's at 163. I bought this on the 25th as well. So this is the 25th. No, I sold it on the 25th. Yeah, I sold it on the 25th. I bought it on the 24th. I'm sorry. So I got to really do a better job of labeling these dates. So this was the day that it was up. It pulled back. As it pulled back, I started wanting to buy. I think I bought like right around this little uptrend right here, and it was trading really around that 188 area for a while. 188 and 194. It like really wasn't showing signs that it was going to give some type of strength above 204. Once I started to see that, and then I saw that 188 wasn't being held, I sold. And once again, I could have sold a lot sooner, but what happened is that I did not draw my supply, my support and resistance lines, and that is key. Another reason why I ended up buying this is because it closed over the 100-day moving average. Therefore, I thought it was going to go up higher, and it didn't. Once it gets, well, my biggest thing is that once it crosses the 100-day moving average, and I explained this in a little bit more detail in here in my article about supply and demand. But once it starts to cross over, that's when you start seeing bullish signals. So I'll give you an example of that with Weight Watchers. Weight Watchers is probably one of the single most impressive stocks this past year. But once it started trading right above the 100-day moving average, yeah, it traded a couple of times over it, but all it needed was just that catalyst, and that catalyst was its earnings. It did pull back after that, but since then it's been on a tear. This is one of the stocks that I believe would be one to invest in, other than like people are looking at Facebook, and they're looking at Google and Amazon, Apple. I'm looking at Weight Watchers. I believe Weight Watchers, I did trade it last year when it was like near to $8, and when it was $20, and when it was $30, $70. I didn't think it was going to be able to run as much as it has, and now that it's pulling back and the selling is almost over, I'm looking to get back in. So this is one. Another stock that once it crosses over the 100-day moving average, it kind of shows some significant strength. I can see this happening. I can see this one starting to get some strength behind it. CDXC. CDXC has been able to do that in the past, where it's gone from $3 to, was that $7? That's like $4 a share, and that is particularly like essentially when did it fell below the 100-day moving average, and then closed above the 100-day moving average and went up. So this was from 3 to 3 to 4, almost 5. So if you had a $2 range where you can just like really easily bank. So once it came back and it started to make the same similar movements, you know, you had like a $4 range where you can make a lot of bank. So, you know, I'm hoping that this sideways action that CDXC displayed does the same thing with Weight Watchers, and Weight Watchers is able to go up and continue to go up. But like I said, I will save this for another video, especially where I can go over some of my watch list stuff. And as you can see, the whole market was pretty bad, pretty bad. So, but in that, you know, we have opportunity where we can make some money off the dips. Ooh, excuse me. We'll make some money off the dips. So, you know, I will be looking at some of these stocks that are green already, like CVSI, ZEST, AWX is already overbought, and B, just because I like its chart pattern. But I'll go over it on another video. But so thank you for watching, and if you definitely pretty much, you know, like and subscribe. I will try to make these videos a lot shorter. I think I'm going to like 30 minutes right now. I'm not even 100% sure. Yeah, 36 minutes. I'm trying to really make these videos a lot shorter, but there's so much that goes on in the market at such a given time. And so, you know, because of that, there's so much to say. There's so many things that are influencing other things that it's really hard to really make a 5-minute video and say this is one stock when one stock is influenced by another stock or indices or other companies and stuff like that. So as I'm learning, bear with me. I will continue to show you more and more content. I am just at the beginning stages, and I'm getting better as with each and every trade. So, you know, I hope everyone has a great weekend, and y'all take care. You know, be easy.